Good afternoon, my dear students. Afternoon. Good afternoon, everyone.
Good afternoon, sir.
Okay, we will start today's session. This session is about calculation of tax basis, and we have discussed basic 10 basic uh, concept of tax base of an asset, deferred taxes, that sort of things, and we have done yesterday the first illustration. Are you clear? Are you all clear on this sum? Illustration part A. Do you have any doubt? Calculation of tax base, right? And I will show you a summary of I will show you a summary. Right. It, it it may helpful to understand, right? This thing. Can you see the PDF file? Can you see this table?
Yes, sir.
Very good. All right. Here the items. Right here, first in item of property, plant and equipment, and accounting treatments, right? Carrying amount in the statement of financial position in the balance sheet. So calculation of carrying amount. Carrying amount, how do we calculate carrying amount for the property, plant and equipment? So cost minus accumulated depreciation. Then we will get carrying amount. The tax rule says that to attract tax relief in the form of depreciation, right? And tax depreciation, right? The important term here is tax depreciation. This tax depreciation is calculated based on the rates given by the government, that is Department of Inland Revenue, Sri Lanka. So how we calculate tax base of TPE? So tax base, the tax written down values mean tax base equal cost minus accumulated depreciation, accumulated tax depreciation. Here, when we calculate carrying amount according to the accounting provision, we deduct accumulated depreciation from the cost. Then we'll get carrying amount. In contrast, to calculate the tax base, we have to deduct accumulated tax depreciation from the cost. Then we will get tax base of property, plant and equipment. And accrued income. Accrued income means income receivable, right? So the income is arised during this period, right? But it is not yet received in cash. So we know in financial accounting we follow accrual basis. No, our assumption is accrual basis. So in accounting, accrued income included in the financial statement on an accrual basis, that is when is receivable, right? Say for example, if you deliver item to your customer, but you are still not yet received money from your customer, but the good has been delivered, then according to the framework, IAS framework or SLFRS, it can be recorded as receivable, accrued receivable. Then here our accounting follows on accrual basis, but tax rule is based on cash basis, right? The tax rule is based on cash basis, not accrual basis. Then when they calculate the profit, right, and that amount is not included until they receive cash. Right? So the tax rule says the chargeable for tax on a cash basis. It's mean when received, right? When you receive cash from your customer, that point only it should be considered as income. So how much the tax base? Tax base 0 in that period. But if government, the tax rule says if it is those two, accounting and tax rules are same, it means both of them are following accrual basis, right? Our company rules also accrual basis, and government also says accrual basis for that particular income. Then there is no difference between carrying amount and tax base, same as carrying amount in financial statement of financial position for what tax base, right? This is for accrued income. And for accrued expenses and provisions, accrued expenses
Excuse
means
me.
uh, wage payable, right? Wage
Sir,
payable. And
hello, sir.
yeah, please. Any questions?
Sir, some of the students joined the lectures in private room.
So I can't do this. I can't do anything because it is a technical issue. So what I can do is I can share the video with them, the recording, right? For in my capacity, I can't do anything other than this, right? Okay, we'll continue. For accrued expenses, it's mean uh, uh, wage payable, salary payable, electricity payable, right? The expenses in respect to this year, but still not paid by cash, right? So the accrued expenses and provisions included in the financial statement on an accrual basis, right? Accrual basis. It's mean when it's payable. But in tax rule, if tax rule says if it is on cash basis, the attract tax relief on cash basis, then so when paid, right? So based on the tax rule, when we paid the salary in cash, that time only it can be considered as an expenditure, right? In this time, we have to take the tax base is 0. Tax base is 0. But if they are following cash basis, if the tax rule accept accrual basis, then the carrying amount and the tax base are same as carrying amount in the financial statement of financial position. And income received in advance, say for example the interest for the next period, you have received in current year. So this is called what? Income received in advance. So in accounting rule, what it says, when the cash is received in advance, it will be included in the financial statement as deferred income. This income is not applicable. It is not respect to this year, current year, right? It's a liability. But the tax rule on case basis, no. So therefore, they realize, right? They recognized it's a income for that this year, not for the future year. So it is according to the tax rule, it is chargeable for tax on cash basis. We have received cash now, so we have to recognize it is an income for the company, for the organization. So it's mean when it's received. So the tax base is 0. If any income received in advance, tax base is 0. Tax base is 0. carrying amount is uh, the, the actual amount, but tax base is 0, right? Here you have to note that when we calculate the tax base of income received in advance, and for revenue received in advance, the tax base of the resulting liability is a liability. No? When we receive any income in advance, it's a liability, right? The tax base of the resulting liability is, this is the formula, carrying amount, right? Carrying amount minus any amount of the revenue that will not be taxable, right? That will not be taxable in the future period. So this is a summary, you have to keep it in your mind, right? You have to keep it in your mind. Otherwise, I will give you a small formula. You just keep that, you just keep in mind that formula, that is enough, right? Now we move to the sum. Right. See this one, part B, illustration B. So interest receivable, right? Interest receivable is mean what? Interest receivable is what? Accrued income or accrued expenses, or what kind of things? Interest receivable is an asset or liability. What? It's fall in what category? Please respond, my dear students. Please respond. It's an interactive session, not one man show. Please. So it's fall under which category? Whether it's current accrued expenses or accrued income, or what kind? What's the category? What category, please? If we unable to understand, I can't help you. Don't you understand? Interest receivable is what? Accrued expenses or accrued income, or what category? Interest receivable. Can't you hear? Can't you hear? Is it audible to you all? Right? Okay. Then I will call the name Nilani Madhusika. Are you there? Interest receivable, is it accrued income or accrued expenses? Interest receivable. Nilani Madhusika. Com 068. So it falls in which category? Com 68. Are you there? Prumana 006. Prusma.
Yes, sir.
Yeah, so it falls in which category? Whether it's accrued expense or accrued receivable, what? So in what category? Accrued expense or accrued income? I can't hear. Please unmute your mic. Interest receivable is accrued income, income receivable, right? So income received, interest is income not yet received for this period. That the income for this period not yet received, right? Accrued income, interest receivable has a carrying value, carrying amount of 1000, amount of rupees 1000 or US dollar 1000. The related interest revenue will be taxed on cash basis. Then what the rule we follow? Right, see the slide, previous slide. See this previous slide. Tax base of an asset is the amount that will be deductible for tax purposes against any taxable economic benefit that will flow to the entity when it recovers the carrying value of an asset. Here, where those economic benefit are not taxable, the tax base of the asset is same as carrying value. Here, tax base. See the tax base, accrued income, no? It's accrued income. It is receivable on accrual basis, but in tax roll, it is received. It can be recognized once they received cash. Then this time, as a tax base 0. The tax base is 0. How much tax base? 0. Right? Tax base is 0. And how much temporary difference? How much temporary difference? Can you see the Excel sheet? Can you see my Excel sheet?
No, sir.
So people reply for this kind of questions, but when I ask questions regarding the subject matter, nobody speaking. Right? I don't know why. Nice. Tax base equal, right? So tax base, not tax base. Here tax base equal 0, no? Tax base equal 0, and carrying amount. Carrying amount how much? Carrying amount. Carrying amount how much? Interest receivable has carrying value 1000. 1000. Right? Then temporary differences, how much? Temporary difference, how much? Temporary difference, how much? Carrying amount minus tax base, then temporary difference equal 1000. Assume that tax rate is 30%. Tax rate is 30%. How much deferred tax? Deferred tax how much? Anybody? Deferred tax how much? Temporary difference 1000. Tax rate is 30%. How much deferred tax? Yesterday I have spent
300, sir.
1 hour to understand this concept.
300.
1000, good. How much? How much? Deferred tax?
300.
300. How do we get it? So temporary difference into
300.
tax rate 300.
1000 into 30%.
Good, very good. Right. So this is part B. Let's see the part C. Part C. The trade receivable. Trade receivable. Right. Have a carrying amount is 10,000. The related revenue has already been included in taxable profit. And how much? So are they the related revenue has already been included in the taxable profit. Then how much tax base? Is it taxable? This one, trade receivable have a carrying amount 10,000. The related tax revenue has already been included in taxable profit. It's mean what? It's mean this 10,000 is included in accounting profit as well as taxable profit. Then are there any differences? See the sheet, right? Accrued income, right? This is on cash basis, right? Right
Sir,
there.
it's not clear, sir. Explain again.
Now can you see? It's receivable, right? Then the tax base is what? Same as carrying amount in the financial statement. Then how much tax base? Accrued income, it is on for the tax purposes we have deducted, the government has allowed to deduct on accrual basis. This time there is no difference between carrying amount and tax base, the same as carrying amount in the statement of financial position. So here, how much carrying amount? How much carrying amount? How much carrying amount?
10,000.
10,000. Good. Carrying amount is 10,000. Tax base how much? Tax base, the tax authority allowed us to deduct the expenses on accrual basis. That's why they are saying, you know, in trade receivable have a carrying amount 10,000, right? The related revenue has already been included in taxable profit. Included in taxable profit mean what? The tax authority also allowed us to deduct that expenses on accrual basis. Then tax base how much?
10,000.
Good, 10,000. Then how much temporary difference?
0.
0. Good, 0. Then how much deferred tax? Are there any deferred tax will arise? Are there any deferred tax? Yeah.
No.
sir.
No. The temporary difference is equal to 0. So therefore there is no deferred tax because accounting profit and taxable profit both are same. Therefore there is no room for arising deferred tax. Right. Now we move to next question. A loan receivable has a carrying amount of rupees 1 million. A loan receivable, right? The repayment of the loan will be no tax consequences. There's no tax consequence. See the here, when those economic benefits are not taxable, where those economic benefits are not taxable, the tax base of the asset is the same as its carrying amount. Keep it in your mind. These points. Here the loan receivable has a carrying amount of rupees 1 million. The repayment of the loan will have no tax consequences. Then how much here? Part D. How much carrying amount?
1 million.
Good, 1 million. And tax base? Tax base? How much? Is it taxable? Is it taxable or not?
No.
No, then it's equal to
0. Pass.
then temporary difference 0 and deferred tax 0, right? So for your understanding purpose, I do this one, right? B in financial statement, right? What's that? What it says? the interest receivable has a carrying amount rupees 1000. The related revenue will be taxable on cash basis, right? When we calculate accounting profit, we have deducted, we have included this 1000 as a revenue, but the tax authorities are not accepted as a revenue because it is not yet received, right? So when we do it in Excel, right, using, say, assume that profit, say for example 1 million, so 100,000, right? And here revenue, you are seeing what revenue is that? Interest revenue, no? Interest. How much interest? How much receivable? How much? 1000, isn't it? 1000. Then total profit. How much total profit? How much? Right? 101,000. And say tax rate is 30%. Tax rate is 30%. How much tax? How much tax here? Income tax? How much? 30%. 30,300. Right? 30,300. Then profit after tax equal total profit minus tax. This is the 70,700 is the accounting profit after tax. But when we calculate, when we do it according to the tax law, tax rule, here we can't recognize this interest. Yes or no? I agree or not? It is not yet received. So accounting, the tax rule says you have to account for the interest on cash basis. So according to the scenario, this cash is not received yet. So therefore, interest income is 0. Then total profit equal 100,000. Tax equal this amount into corporate tax rate is 30%. How much? 30,000. Then profit after tax, how much? How much profit after tax? 70,000. 70,000. How much difference? Difference how much? Difference how much? You know here. Not 700. Here deferred tax. Here deferred tax. Actual tax is 30,300. Yeah, actual tax is 30,300, but current tax according to tax rule. Here, how this difference arises? Due to temporary difference. So we no need to do this kind of calculations. Without doing this, we can directly find the value. Here we calculate the carrying amount and we calculate the tax base, and then we have to calculate the temporary differences, and temporary differences into tax rate equal deferred tax. So no need to waste our time, right? Clear? Okay, good. And right, I hope all of you got clear idea on this sum. Now, right, you can read, I have already explained this one. Right, tax base of a liability. Tax base of a liability. You see, this is what? PP, property, plant, equipment, is an asset. Interest receivable, accrued income is an asset. A trade receivable, right, is a current assets. No, accruals, trade receivables. And loan receivable is assets. Loan receivable is assets. Now we move to liabilities, the tax base of liabilities. These are the little bit tricky part, right? So when you calculate the tax base for assets, it is direct, right, straightforward. But when you are dealing with the liability, we have to think for a while. And there's a formula to calculate the tax base of a liability. In case of a liability, the tax base will be its carrying amount minus any amount that will be deducted, right? That will be deducted for tax purposes in relation to the liability in the future period. But in case of revenue received in advance, for revenue received in advance, as I explained to you earlier, the tax base of the resulting liability is its carrying amount minus any amount of revenue that will not, very important, that will not be taxable in the future, that be not taxable in the future period, right? Right, the first one, state the tax base of each of the following liabilities and any resulting temporary differences, right? Temporary differences. First one, current liabilities include accrued expenses. Current liability include accrued expenses with a carrying amount of 1000. The related expenses will be deducted for tax purpose on cash basis. The related expenses will be deducted for tax basis. So we will work out on this. So we know the tax base of liability equal carrying amount minus what here, any amount that will be deducted, any amount that will be deducted for tax purposes in the future, right? Tax, right, that will be deducted for tax purpose in relation to the future period. So right, we put future tax obligation, right? Future tax deduction, future tax deductions. Tax liability equal, sorry, tax base liability equal carrying amount minus future tax deductions. In the first question, right, the first question, part A, right, part A, we first carrying amount, how much carrying amount?
1000.
1000, good, 1000. And right, this is an expenses, isn't it? This is an expenses, and we should deduct future tax deductions, right? We have calculated profit based on accounting rule, and this is an expense. No, it is payable. It is payable. Do we have included these expenses in accounting profit or not? When we calculate the accounting profit, do we consider that expense as an expense? Say for example, wage for the period 1000 is an accrued expenses. We are not yet paid. When you calculate accounting profit, do you consider the wage expense, the wage as expense or not? Expense or not? Expense, no? Expense. But according to the tax rule, is it expense?
Yes,
Is it expense for this period? Does it expense for this period according to the tax rule? We are not yet paid. So therefore, tax authorities will not accept as the wage as an expenditure for this period. Are you agree? Are you agree with me?
sir.
So no.
Yes, sir.
Okay, good. So when you pay next year, is it tax deductible or not? Is it tax deductible expenditure or not? When you pay wage for next year on cash,
Consider it, sir.
it will consider. So therefore, we have to pay tax. No, it in future here future tax deductible. How much? How much future tax deductible? 1,000. Right? When you calculate the profit, taxable profit next year, you can deduct
So this
this
1,000
1,000 as expenses. So then the tax base equal how much? Carrying amount less any amount future tax deductions. How much tax base? How much tax base? 0.
0.
Tax base 0. Then
So
how much temporary differences? Temporary difference.
1000.
Temporary difference 1,000. How we get here? Carrying amount is 1,000 minus tax base 0. Then temporary difference is 1,000. Right? Clear? Temporary difference 1,000. If it is coupon tax rate, corporate tax rate is 30%, then how much deferred tax here? How much tax base? So how much deferred tax will be? 1,000 into 30%. How much deferred tax? How much deferred tax?
300.
300. Simple.
300.
Yeah, 1,000 into 30%. $300, right? So check the rule. Check the summary rule. Here, what is accrued expenses? No, accrued expenses here. Accrued expenses in accounting included in the financial statement on an accrual basis when it's payable. That's accounting rule. And if government allow us to deduct as an expenses on case basis, right? On case basis, and how much tax base? How much tax base in this scenario?
0.
0. The same thing I have explained in different way, right? Then we go to B, right? B. Right. The current liabilities include interest revenue received in advance. Interest revenue received in advance. Right? Be careful. This is the point. Most of the students are failed to answer this question correctly because it is a lack of understanding. The interest received in advance, right? Interest revenue received in advance. It's a liability or asset. It's a liability or asset. If you receive revenue in advance, is it asset or liability?
Liability, sir.
Liability. So is that revenue is attribute for this year or next year?
Next year, sir.
Next year. So in accounting, in accounting rule, this revenue is not belongs to this year. We cannot include when we calculate income, profit. We cannot include this advance revenue, advance interest revenue in the profit. We can't. The accounting rule not allow to add this interest revenue as an income for this period. But the tax authorities follow cash basis, isn't it? So, but according to the tax rule, we have to include this 10,000 interest revenue as a revenue for this period, right? So there is a difference. This is a temporary difference, right? Temporary difference. Then, and then how much? Before that, you have to see here the revenue. We have to for this point for revenue received in advance. The tax base of the resulting liability is its carrying amount. Carrying amount. How much carrying amount? How much carrying amount? How much? 10,000. No.
10,000.
That's good. 10,000. Carrying amount 10,000. Carrying amount 10,000. And then future tax deduction. Are there any tax deductions in the future? Are there any tax deductions in future for that income? Already taxed? No. It's already taxed. Yes or no? This 10,000 this year is taxable. Yes or no? According to the tax rule, the government will charge tax for this revenue. Yes or no? Yes or no? According to the accounting rule, this 10,000 is not profit for this period. But according to the tax rule, this 10,000 is a revenue for this period. Then they will charge tax on this year. Are you agree? Are you agree with me? Yes or no? So if they charge tax this year, the next year there will be no deductions for this income, right? Then how much in the future? Are there any tax deductions? No, there is no tax deduction. But the rule says we should deduct what? The revenue less any amount of revenue that will not taxable. So for how much they are not going to tax in the future? For how much they are not going to tax? How much? 10,000. For this 10,000 already taxed, then they don't want to tax again. Then how much tax base? Tax base how much?
0.
0. Right? Most of the students are confusing here. It's a revenue, right? It's a revenue receivable. Sorry, revenue received in advance. Revenue received in advance. For that, the rule is different. We have to deduct the amount that will not be taxable. But in case of any accrued expenses, we have to deduct future tax deductions. But for the revenue received in advance, we have to deduct future tax not deductible, right? Future tax not deductible. That's different. And are there any temporary differences? Are there any temporary differences here? Yes or no? Carrying amount
Yes.
10,000, tax base 0, then
10,000.
10,000. Then how much tax, deferred tax?
3,000.
How much deferred tax? 3,000,
3,000.
right? Then we move to part C. Here, no? The current liabilities include accrued expenses. Current liabilities include accrued expenses with a carrying amount of rupees 2,000. The related tax expense has been already deducted for tax purposes, right? Already deducted for tax purposes. It's mean in future there is no tax. There is no tax. Okay, the related expense has already been deducted for tax. Then we move to the formula, right? How much carrying amount? How much? 2,000. In future, are there any deductions for these expenses? Please answer for this question. Are there any future deductions? Are there any future deductions? It has been already included in the profit. Yes or no? Are there any future
No.
deductions? No. Then how much? Zero. Then how
Zero.
much tax base? Tax base, carrying amount minus future tax deductions.
2000.
2000. Good. Temporary difference?
0.
0. Then deferred tax?
0.
0. Right. Then we move to the summary. Yeah, accrued expenses. Right, accrued expenses. In case that tax relief on accrual basis. Accrual basis. It means this time same as carrying amount. Right? Same as carrying amount in the first element of financial position. So therefore, there is no deferred tax. Right? There is no deferred tax. And part D, current liabilities include accrued fine. Accrued fines, fine payable, right? Fine payable and penalties with a carrying amount 100. Fines and penalties are not deductible for tax purposes. Not deductible for tax purposes. Then are there any future deductions for that expenses? Are there any future deductions? This year we are not paid. According to the accounting rule, we have to deduct this fine 100 rupees as expense, right? But in tax rule, even though if they paid for the next year, will they accept as a deduction? Fine, donation, entertainment expenses, any provisions, they are not deduct, right? Then there is no future deductions. Then carrying amount, how much? Carrying amount, how much? How much carrying amount?
100.
100. Very good. 100. And are there any future deductions? Whether the tax authority will consider as expense? Fine? No, the government will not accept as fine as an expenses. So there is no future tax on that expenses. The tax base, how much?
100.
100. And different temporary difference?
0.
0. Temporary difference? 0. And deferred tax?
0.
0. And part D. The loan payable has a carrying amount of rupees 1 million. Loan payable has a carrying amount of 1 million. It means liability. The repayment of loan will have no tax consequences. Will have no tax consequences. Then how much the carrying value? The prepayment of the loan will have no tax. Are there any future tax deductions for these expenses? No tax deductions. It means there's no tax in future. Then how much? How much? Carrying amount here?
1 million.
1 million. Are there any deductions for this?
No.
No. And tax base?
1 million.
1 million. And temporary differences?
0.
0. And deferred tax?
0.
0. That's all. Right. And yeah, this is the answer for that question. And circumstances in which the carrying amount of an asset or liability will be equal to its tax base. The circumstances in which the carrying amount, right? The carrying amount of an asset or liability will be equal to tax base. It means there is no temporary difference when it will arise. IAS 12 or LKAS 12 give the following examples of circumstances in which the carrying amount of an asset or liability will be equal to its tax base. This means the carrying amount and tax base are same, and no temporary difference will be arise. For examples, number one, accrued expense. Accrued expense which have already been deducted in determining an entity's current tax liability for the current and earlier period. Here, for example, here this one. This one, no. The trade receivable have a carrying amount of 110,000. The related tax revenue has already been deducted. Here, part C. How much here? Carrying amount and tax base are equal, and there is no tax differences, right? And here, a loan payable which is measured at the amount originally received, and this amount is the same as the amount prepayable on maturity basis. And the accrued expenses, again, which will never be deductible for tax purposes. So for example, fine. Here, fine and penalties are not deductible. So that time, so this time D, no, D. Yeah, D. The carrying amount and tax bases are equal, and the accrued income which will never be taxable, which will be never taxable. So for that also there is no differences between carrying amount and tax base, right? I did my best to explain the basic concepts, right? I have took 3 sessions now for to explain this thing. So in future uh, we will go very fast because I explained you at the very bottom level, right? So I teach you very slowly, and if you have any doubt, please let me know, and don't keep it forever, right? If you have any clarifications, please clarify with me, and you are unable to understand the forthcoming sessions. And the next session is will about this accounting theory, taxable deductible differences. We have to do some calculations, right? Exam type questions. We are going to discuss exam type of questions, right? We will discuss. So before that, you have to have a clear understanding on the basic concepts. Very fundamental things I have explained to you very clearly. Anything to ask? Any doubt? Any doubts? If you have any doubt, please.
No, sir.
Okay, then I will send you the attendance link. Please register your attendance. For others, I will send them a recording.